Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the NFT lending market. World records being set. Cannot wait to get into all of that and more. But before we do that, I'm your host, Beechek. I'm joined by my legendary co-host, Legendary. And just a reminder, friends, that nothing that we say here is financial advice. This modern market is exceptionally risky. We do not know anything for sure. Please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, how are you doing this Monday, the 5th of February?
GM, doing quite well. Finally booked my stay for NFT Paris.
Ooh.
That is lovely. Quite excited
Ooh.
for that one. I'm also excited. Seems there will be quite a lot of traveling in Feb for me, because obviously we do have the Modern Market meetup, the first one later this week in London, and I'll be there for it as well. So
Let's
it
go.
is an exciting week and month ahead. You looking forward to our Modern Market meetup on Thursday?
As usual, I am obviously looking forward to it, but find a way to get overwhelmed by the various things that we are doing. So having two events on your mind, given that we've never done events, right? We are not events people as such. It's something that we're trying to do for the first time, but then the fact that we've got two on our mind at the same time has become a little overwhelming. Not that we're doing like a huge party, it's just going to be a cool hangout, bringing cool people together. So that's what I'm telling myself, to just be like, chill out, mate, chill out. It's going to be nice. So I'm
What do
really,
you
really,
mean it's not a huge party?
it is not a huge party,
What do you
Legendary,
mean it's not a huge party?
unless you want to plan a huge party. I am not throwing a huge party, but having some really cool people just confirmed that they're going to be there. So I'm really, really looking forward to it. How are you feeling about it, given that we've never really done anything like this before?
What have we done before? We've done a little breakfast at NFC
Oh yeah, we
Lisbon.
did.
What was it? A
No,
year
no,
ago
no, we did
or
that
two
in
years
London.
ago?
We did that in London. Remember, in Hyde Park?
Oh yeah, it was London, not Lisbon. That was around NFT London. Yeah, I don't remember too many conferences. That was for airdrop season.
Yes.
The 32 Dreams time period, if you want to call it like that.
Yeah.
That was quite lovely, but I do expect that the one at NFT Paris, as well as the meetup on Thursday, will be a decent chunk bigger than the breakfast that we had in London.
I think so. I think so. I hope so. But at a minimum, I think it's just really nice to be able to finally meet a bunch of people, give people an excuse to come out. I think one of the things I was saying, I mean, I don't know if you know this yet, Legendary, but I'm actually moving out of the flat that I'm in at the moment. I don't know if I told you that. Um, yeah, so I'm moving out from where I am. I'm moving like slightly further away from London, because I kind of realized, I'm still going to be in London, but just not in the center like where I am at the moment, because like there's just not enough to keep me here. There's not enough excuses for me to get out and meet people. I'd always stayed here because I thought, oh, it's so easy to get into the city. There'll be so many occasions that I need to be there. And in practice, yeah, there's a couple of things every now and again, but there's actually not that much. So
Yeah.
if I'm feeling that, I just assume other people feeling the same thing. And I want to just, create something where people have an excuse to meet up in the city. Thoughts?
Fair enough. It's
You're
interesting
finding something
because
funny.
yeah, no, I'm finding it funny that it's happening at the same time, because I'm also going to be in a new place when I'm back in London this week, but I'm going to be more in the city from now on, so I'm going to be in Chelsea most of the time when I'm in London, but probably I will go through the same like learning and experience curve that you've been through as a Londoner yourself.
Probably, yeah. It's nice to see those airdrop checks hitting the bank account, Legendary, now that you're going to be in Chelsea more.
Yeah, the good old airdrop farming, huh? Isn't it a beautiful, beautiful time to be around?
Very good. Very good. Nice to see that work out nicely. Look, let's get into the news. We've got a lot of stuff to cover today, all kinds of very, very interesting stuff. Today's show, before we do that, is sponsored by Gondi. Gondi is the premier NFT lending protocol where smart lenders can refinance NFT loans and smart borrowers can get steady rates against their best NFTs, buy now, pay later, and eradicate potential liquidations with the sell and repay feature. We're going to give you a breakdown of one of their market leading features a little later in the show, so stay tuned for that. So what we want to do first is get into the snapshot, which is, I need to find it. As always, it's pinned up top. And if you find that it brings you some value, please do give it a like. And we're going to get into it on YouTube and here in just 1 second. Here we go. Let's get into it. Starting with the price action, we've got everything's pretty flat actually. Bitcoin's at 43K, ETH was flat at 2.3, Solana at 97, Ape at 1.4. NFT volume on ETH was quite high. We'll have an explanation for that in a second. ETH was at 17.1 million, Solana at 6.2, Bitcoin at 7.1. First headline, $1 million loan originated on Gondi against the Ape Punk 8219 of G Money. Very, very prominent CryptoPunk loan, world record fee. Going to get into a discussion on that in just a little bit. Number two, NFT project Nobody mints out at 0.195 ETH and rips to 0.9 ETH with 2,500 ETH volume on the first day of trading. Was not on my radar. Want to touch on that briefly too. And finally, Web3 social app Farcaster, daily active users rockets and passes WeChat and app downloads on iPhone. We want to, Clouted Mind had this to say about Farcaster. Farcaster went from being an online ayahuasca retreat for ETH maxis and aspiring Y Combinator-ish founders channel to full-blown consumer crypto social app with the future of content tokenization and programmability adopted by the entire crypto community in like 1 week. Want to get into the veracity of that claim, think about where Farcaster is going. Is it worth spending our time there? Going to get into that in a second. Some more floor price action. We've got CryptoPunks at 4.5, Mutants at 4.3, DGods at 2.9, Captains at 4.4, Azuki's at 6.7, Penguins at 16.2, Moonbirds at 1.1, and the Nouns winning bid was at 7.8 ETH. A couple of big sales from kind of art focused sales from the weekend. Ripcash sold an edition of V for 30 ETH. That's $69,000. And X Copy Breaker sold this morning for 100 ETH. That's $229,000. Legendary. That is the price action. Those are the headlines. Any numbers standing out to you there?
I definitely got to say the $1 million loan is standing out as well. But not wanting to get into the news before we're actually there. But I also do have to say that I completely missed the Nobody mint as well. Obviously, on the art side of things, cool to see Xcopy sales happening in that 3-digit ETH territory. Always lovely to see. So quite a few numbers that caught my interest today.
Yeah, a few comments as well in general saying like, wow, big numbers, big numbers. Should we just get straight into it? Let's get straight into the loan because I think there's all kinds of interesting stuff to talk about there. So I can set that up. It's already the title of the YouTube show and the Twitter Spaces. So I want to start with the key details. So the key details are these. I'm going to share the screen on the loan for people who want to see what a loan looks like when you do something like this on Gondi. And this is actually a really interesting thing because if you think about before Legendary, when you have these types of transactions that go down, agreements, private agreements really made between two parties, you don't necessarily get to see it there, right? You don't see the details, you don't see the interest. But now in this new paradigm, you get to see everything. So as you can see on the screen, if you are watching, maybe you could screenshot this Legendary and tweet it out either via the main account or your personal account as well, in case people wanted to see. So you can see you've got G Money's famous Ape, and the principal amount of the loan is $1 million. The duration is 6 months, so that is 180 days. The net APR is 14%. It's already accrued $1,000 of interest already, and the remaining interest is $68,000. So in essence, just to like the kind of headline figures is the $1 million loan, 14% APR. He roughly has to pay back $1 million plus around $69,000 in order to pay back the loan at the end of those 6 months. Or alternatively, what you're allowed to do with these apps is that if 1 month into the loan and say he's accrued $20,000 of interest or $10,000, whatever the numbers make up, you can pay that back off. You can pay the principal plus whatever interest has accrued off early if you want to, as the borrower. So you do kind of have that flexibility as such. Legendary. I'll stop there. Those are the headlines. Absolutely huge for the NFT market. I think huge implications. We're going to get into some of the thoughts that G Money shared himself on the significance, not just of this loan, but of NFT lending itself. And then I've got some more thoughts on it, but your headline thoughts first.
First headline thought, I would be really curious to know how many Gandhi points you farm with a loan of that size, kind of connecting it to the airdrop discussion that we had before. Second of all, again, I love to see the lending market not only work out with floor price JPEGs, but also work out with the top end of things, because this to me really is what validates its value. Because you could make an argument that farming a floor Pudgy or a floor Ape or a floor Punk loan on Blur or wherever else is a nice thing to do, but that's more driven by incentivized bidding. And if you have someone set up a loan for like a top end JPEG that shows real interest, I mean, yes, you could still make the argument, that loan is set up for someone to farm a shit ton of Gandhi points, but I would argue that the risk of sitting on a $1 million loan of an asset that wouldn't have the worth is way, way higher than just wanting to farm some points. So to me, seeing high-end loans is a validation of A, our space, and B, also of, well, the value of certain collections, especially the punks.
For sure. Interesting stuff. Let's get into what G Money said himself about it to understand his thinking. I'm going to read all of it. It's not a very long thread that he wrote, but I think it does give some insight into why someone would want to do something like this. His thread reads like this. Again, it's up on YouTube if people want to kind of see it at the same time. First, he says, NFTs are worthless. A little over 3 years ago, I took out the largest on-chain loan against an NFT for $25,000. Interesting. I didn't know that. Today, I'm taking what might be the biggest loan against a single CryptoPunk, possibly a single NFT, but not sure and don't have time to fact check. What has excited me about NFT finance since its inception is how it will change the market. What kind of supply shock will there be when owners of these high value assets don't need to sell for access to liquidity? I'm slowing down on some of the important points. Thanks to NFT finance, platforms like Gandhi, Arcade, NFTFi, and lenders like MetaStreet, as well as numerous other players in the space, access to capital will become more efficient and cheaper over time. Currently, there are two limiting factors I see. Number one, the first is a mismatch between currency that lenders want to lend and borrowers want to borrow. And I think what he means by that is that sometimes I personally don't really want to lend in ETH, for example. I would prefer to lend in USDC because that can be the more volatile asset and you can get wrecked lending in ETH. Whereas in USDC, I personally feel more comfortable. I think that's what he's speaking to there. Number two, once we can figure out how to match these two groups, we will see an explosion in NFT financing. So, and number two is a misunderstanding of the NFT market. Currently, anyone not in crypto, most of the population, thinks all NFTs are worthless. This will change as lenders begin to understand the market. Just as an aside, this is the point that I've always been making, and what for my thesis for NFT lending, why I've done investments into NFT lending, why I do NFT lending myself, is because I realized deep in the bear market, these JPEGs or certain JPEGs are trading for 5-6 figures over and over and over and over again. And it doesn't matter what Rolling Stones say, they just are trading for huge amounts. And so there's that misunderstanding where people just haven't quite clocked on to why these things are so valuable. Finally, he says, the amazing thing is, even with the massive pullback the crypto and NFT markets have had over the last 2 years, CryptoPunks are sitting at a $140,000 floor as I type this. We had an incredible bull run last cycle. This was with little to no credit in the system. Can you imagine what that is like with the introduction of a real credit system with natural buyers and sellers? Hint, mortgages were introduced into the US housing market in the 1930s. Legendary. Just going to stop there. I've got a lot of thoughts on that. Funky's hand is raised. T-Row's hand is raised. Probably want to come in on this too. What are your thoughts, key takeaways from hearing G Money's thinking on the NFT lending market?
I agree with almost everything that he says. I think one of the key takeaways for me is something we also spoke about on the show quite frequently. When Blend was introduced, got into NFT lending, you obviously been more active in that segment than I've been. But back then, our key takeaway was the additional volatility that is introduced due to lending in the market is huge, both on the upside and on the downside. We've seen collections pump just off favorable lending conditions. We've seen collections dump because they're not as interesting anymore for incentivized lending as well. And I think that now that we are seeing more loans on the top end spectrum, again, not only floor loans being taken out, which obviously is not something new, right? We've seen high value loans all the time, but now we have a significant milestone, if you want to put it like that. This on the one hand. On the other hand, we're seeing more on being able to borrow against real world assets in crypto, whether that's your Boxed Supreme t-shirt collection on Arcade Finance, luxury watches, etc., or other real world assets. I think we're introducing a huge amount of additional leverage into this market, which will just act as a catalyst, as additional fuel in the fire that goes both ways. But as long as the sentiment is a positive one, and we are seeing an uptrend in the market, it will be accelerated with loans. And final key takeaway, and it's again not anything new, right? I'm repeating myself because we spoke about that as well quite often. But again, if you want to trade in this space, you can't do that without having a look at the lending markets. If it's something that's more long term than just buying a hyped mint, waiting for a token announcement, if that's the gaming segment, and then just get the fuck out of it and sell. But if you're in for the long run, if it's a significant collection that has an active lending market, you need to follow those news. And to me, what I will be interested to see in the future, in a similar vein as we've seen marketplaces evolve from like singular marketplaces to being marketplaces plus aggregators, right? You have OpenSea with OpenSea Pro, you have Blur as a marketplace, but also as an aggregator, you have Mintify aggregating, etc. We will need to see something for the lending market as well, for both being able to track data, but also being able to diversify, to spread liquidity. You might want, you might have 100K USDC and want to be a lender against punks. Why not have a platform that can aggregate all of this and distribute your liquidity across 3-4 platforms in a range of terms that you find favorable? And this will have to happen. Also, it's a bit more complicated because liquidations, lending mechanisms, etc., work different on every platform. But at the end of the day, the principle of a loan is the same across all those platforms.
Yeah, interesting stuff. There's definitely whole lot of room to grow. So I think what you're talking about there is some of the ideas of how the market can develop. And I think all of those things are true. We've already seen some of the ways it can develop by allowing you to get exposure to loans by just taking a tranche. It's like, say you don't have 40 ETH to lend against a CryptoPunk, you can take a tranche of it for like a few ETH or something like that. And you can refinance existing loans like that on Gondi, at least. I don't know if you can do that on other platforms. So all kinds of ways that the market can become more efficient. The key thing for me reading this, I mean, I want to pat myself on the back because this is something I've been talking about for months and months. And it's quite nice to see some of that validation in like a thesis that you've held for a while. People might remember that I'd been saying this stuff to myself and other people so often, but I hadn't really backed it with any kind of personal action. And that's basically why I bought a Squiggle a few months ago, potentially. Because I was like, look, I keep saying this thing. I'm so convinced of this thing. I need to put my money where my mouth is and back it, because I had the capital to do it. I just hadn't done it yet. So I do think it's nice to kind of see someone who's very respected and obviously been very successful kind of back up your thesis in that respect. I guess the thing I hadn't thought about so much, which I think is interesting, maybe it's worth touching on this legendary, is the idea that the previous bull market had no credit in it. Now we are moving into a world where there's credit in it. Can you imagine what that is like with the introduction of a real credit system with natural buyers and sellers? What do you think of this comparison with mortgages? Do you think that's a reasonable comparison? G Money says here in his very last tweet, hint, mortgages were introduced into US housing market in the 1930s. And obviously everyone will know that the housing market, both in the US and in the UK, and I suspect in a lot of other in a lot of other prominent cities, has completely exploded in the last century, partly as a consequence of credit kind of coming into the system. Is that a reasonable comparison for the highest value NFTs?
Yeah, I think there is. This is kind of the analogy that I went for with the additional fuel to the fire. That will introduce more volatility on both the upside and the downside. Markets will move faster with leverage. They will crash faster. They will pump faster. And I think especially in a state of euphoria that we are in right now, I can tell it, I can tell you from my personal perspective right now, I have a hard time of having capital sitting idle. So basically I did take out loans against almost all of my Solana NFTs on Sharkify to use that Solana and throw it into Camino Finance, into Meteora and other platforms to just farm um, their APY, to farm their airdrops, their loyalty points, whatever it is. And if the sentiment is positive, I can imagine that a lot of people will do that. Of course, it will take time for people to get accustomed to feel comfortable with taking out loans. And I think that utilization ratio will increase over time. But in a similar vein, if you're like used to that system running on steroids with leverage, or even sometimes with multiple layers of leverage, um, then the liquidity dry up will be even quicker and even more brutal once that sentiment is shifting.
I don't know if I mean I don't know what the right answer is on this actually, but I'm wondering whether isn't this slightly different to a system that's running on leverage? Um,
Depends what you do with the capital, right? Like, say I have a crypto undead and I borrow against that on Sharkify, and I use the capital to buy another crypto undead, and then basically loop that. So if you were to use the capital like that, then definitely. If you do it in a different way, like I am doing it right now, again, I'm just borrowing against the NFTs and I'm throwing them into DeFi protocols because I don't want to build a leveraged long JPEG position, then not. But I can imagine that with more capital becoming accessible by that, and if you have a a loan market that has millions and millions of dollars, say, across the Bored Ape ecosystem, there will be people who will use part of that liquidity to buy up more stuff. And if it dries up, it can change. Although the counter argument to that would be, and that's a post that NFT Stats had up over the weekend, I think, NFT Stats pointed out that there was, for the first time in a long time, the one single date where there was no Bored Ape traded on Blur. And basically, his point was that all that incentivized bidding, the data shows that, is detrimental to the floor price, because once you have lots of participants who are just there to bid and to farm Blur points, they are not really here for the asset. So they also have an easier time to sell. And with Blur, you have the fact that if that interest goes down, not the interest rate, but if interest in lending goes down for a specific collection, then points also go down because there's less activity on it. And that is basically an effect that's kind of accelerating, and then it will go to the bottom of the list of collections that are being farmed. So you could also make the argument going into the other direction. But I do think that the analogy, to put a bow on that from my point of view, by G Money to compare it to the mortgage market, to the housing market, is actually a very accurate one.
Interesting stuff. Shout out to Greggy in the comments who says, not with mortgages, but with luxury collectibles. People will default on their other loans first before their mortgages. I don't know about that, Greggy. Some of these NFTs are pretty damn important. You want to make sure you get your priorities straight. Thinking about some of the stuff you said was interesting, Landry. I do think that what, as you said, is very important to consider what people are actually doing with that capital. So G Money's taken a $1 million loan out. I believe from the reading that I had done, it suggested that the ape is like roughly valued between 3 to 4 million. So that's something in the region of a 30 to 40% loan to value, which, based on, just for people to know, that's like a very conservative amount based on the way the other things have been, the way the other loans are being done in the market. Most loans at the moment can be as high as 50, 60, 70%, like something between 60 and 70% on Blur, on the Blend protocol right now would be considered like fairly safe. I think I have 3 Pudgy Penguin loans out at the moment, and it feels very comfortable at like 62% loan to value or something like that. So understanding that G Money's loan is at 30% loan to value, as a lender, you should feel, I mean, not saying you do 100%, but you should feel pretty safe that you're very much covered if, in the crazy scenario that G Money did not pay back the principal and the interest on the date required, you would feel very comfortable that he's taken your $1 million, hasn't paid you back, and you'll be able to sell that ape for 2, 3, 4x more, probably very, very quickly. So that's just a little bit of perspective on the value of the loan. A couple of points from Punk's OTC. I thought this was very interesting analysis from them. For people who don't know, Punk's OTC kind of market makes the CryptoPunk market. He's always buying and selling CryptoPunks. One of his main goals has been stated that he's always trying to accumulate more CryptoPunks. He gave a few thoughts here. He said, since everyone is posting their view on G Money's NFT loans, he says 14% APY feels fair. Number 2, he likely could have borrowed over 1 million if he wanted to. And I completely agree with that because of what I just said. 30 to 40% loan to value seems very low. You could probably push to 50 to 60 and people will still be comfortable with it. Number 3, 1 to 5% chance that 6 months from now, the punk can't be sold for $1 million. So although he's phrased that in a negative way, the way to read that is that there is a very, very small chance, like very, very small, probabilistically, that this punk will not be worth $1 million, which means that it's a good deal for the lender as well. And then the final point, which I think is kind of interesting, far more people think they can generate 14% APY than can generate 14% APY. Legendary. Any thoughts on the probabilistic thinking first, which is like 1 to 5% chance that 6 months from now the punk can't be sold for $1 million? And then the final point, far more people think they can generate 14% APY than can generate 14% APY. What do you think these funds are being used for? What would be a wise thing to use? Do you have any idea? What are your thoughts?
Yeah, I think the 14% APY point is a very fair point, but I think it's also important to add that there is the incentive of farming Gandhi points with a loan of that size. So obviously the expectation there is to do more than 14% on both the borrowing and the lending side of things. So probably G Money will have an expectation that with that loan, despite having to pay that interest, the points will have a certain worth. And on the borrowing side of things, I would say that your risk is even lower than that, even if G Money were to default on that loan, because you still have accumulated points with it, and then would have a pretty rare CryptoPunk that has a high likelihood of being able to be sold over that $1 million mark.
Interesting perspective. I do think that there must be something that he would like to actually use with the capital, though, for this period of time. But as you say, like there's just so many things to do at the moment. So there's potentially all kinds of places where you would have a reasonable expectation to receive more than 14%, right, in the next 6 months or so. Let's pause it there. Let's go around to some hands, hear some thoughts. I believe, Funky, your hand was raised first. What are your thoughts on this world record NFT loan. Welcome to the stage, my friend.
It was actually Tiro first, so I just want to give him his due.
Let's
go ahead, Funky. You're up there. Go. You're talking. Go.
Okay. Well, anyhow, this is really interesting conversation. You guys already covered a lot of the points that I wanted to share. Anyhow, but as a Florida resident, I would be remiss if I did not mention this has already happened here in Florida, and I think the real estate piece is where this is all going. This, Michael Arrington, I think, bought the first house via NFT somewhere in Europe, and then just across the bay from me, there was one that was sold in Gulfport, Florida via NFT. And there's just so many opportunities. Like this, I think is, it was just briefly touched on RWAs. I think this is indicative of where this is all going. And a lot of this is just going to lead to what you were talking about, B-Check, in terms of the smoothing out of volatility as we get additional liquidity and everything else coming into the system. And these kinds of products grow over time. So I think your thesis was spot on. I think that you were ahead of the curve here. And, you can only imagine what this is going to be like in, say, 10 years time in 2034, when, everything is tokenized and there's just access to this. And people are going to want to take advantage of it, right? Because the smart, wealthy people always use credit to their advantage, and they will take loans because then they can use that capital in other places. You guys covered a lot of this. But I'm really excited to see how this is going to play out in the real world when we have greater amounts of tokenization, because the NFTs are just things like CryptoPunks are just indicative of what's to come in the future.
Absolutely. Love that point about how things are already going on in Florida. Thanks for that, Funky. One of the key things, just to put things into perspective for people, of like why I was so confident about it and why I think it's getting even more traction now, is that the key game changer between, and all these things are relative, right? The reason why these assets are so much better than traditional assets, and I've got a thread coming out on this later today at some point, I'm just getting a few more data points, is because you have perfect provenance, which when compared with the traditional art world, it can always be a bit cloudy and people might want to argue about that after the date. You also have perfect financial transparency, which is you can see the asset trading 24/7, 365 days a year. And you can, as a potential lender, you can look at that asset and see, okay, I can see that not only the trading, but I can see the standing bids. I can see the loan charts, all like on a live basis. And when you compare that with maybe traditional assets, when I spoke to a big lender in London telling me that if you have a fine Rembrandt piece, the best you're going to get, the very, very best, is 30% loan to value. Because you have to think, not only do you take on some of that risk about there being no financial transparency about, when were the last Rembrandt sales? How are you going to get that information? How are you going to know all that stuff? But also the cost of liquidation, and this is absolutely key, the cost of liquidation of these assets is basically zero. If you take on an amazing physical asset, the cost of liquidation is seriously high. Not only do you have insurance, you have storage, you have the buyer's fee that you're going to have to pay to Sotheby's or Christie's or whoever the person is if you are not able to do a private sale by yourself. And 9 out of 10 people are not able to find someone to just buy an asset for like 100 grand. It's just not possible. But in our market, there are people routinely doing that all the time. And you can see that standing bid there all the time. So say you do this loan and someone defaults, it's like, well, okay, well, there's a standing bid on Blur for like 60 ETH or maybe 55 ETH right now for CryptoPunks. So like, that's amazing. Say I do a loan at 40 ETH and someone defaults, it's like, well, immediately within 20 seconds, I can dispose of the asset and make 15 ETH. Like that's just not been possible before. That is the real game-changing aspect of this tech and why I was so bullish, and that's what tweaked in my head. Want to throw to Tiro. We've got Oxy's hand raised, Kalano as well. I want to hear from you in just a moment. Tiro, welcome, my friend. What are your thoughts on this world record loan?
Good morning, legendary B-Check, Funky. Had a couple thoughts on this big 1 million lending event. I think it's great for the CryptoPunks and some of these holders that are well-established projects that have provenance and a history. I'm just worried about Johnny Q lately, who just walks into Sol and buys say a crypto undead for just this point, and just it could be worth I don't know, $5,000 fiat, 50 Sol, give or take, and they're trying to leverage. It's going to be interesting without having the FDIC in America backing up these loans, and people already taking risk with cryptocurrency, and then you double down with NFTs, which are even a riskier asset, and then loaning against those NFTs. I would not, if I'm G Money. I'm not the greatest trader in the world. I wouldn't want to have a 6-month period where I know I have to make $68,000 just to repay a loan. I would not want that pressure,
Sure.
especially with the markets, the way they fluctuate. You hit them in, you don't get an allow list, you don't get a couple things you'll go your way, and you're underwater fast. So, and there's no one to bail you out but yourself. And I saw a lot of the loans against apes when they were at their all-time highs, and we've seen some of those default, and where the floor price on apes is now. And there needs to be, it's great that it's on the blockchain, though. Like, to be positive, it's on the blockchain. You're talking about, or selling a Rembrandt piece. You can't sell a Rembrandt piece without, going to Sotheby's and rounding up all the olds and the boomers and some old money. And those people may not even have their money in anything but, a simple bank account. And that there's no way to make, put bids out and do what we do, say on Tensor or Magic Eden or Blur and all that. So I'll shut up now because there's other people and it's a short show. So that's just my take. So appreciate the Vine, and have a great morning, everyone.
Love it, man. Thanks so much. I completely take that point, man. I think that's what Legendary was maybe alluding to. It's just like there is a pressure now to make sure that you're able to make, and that's actually what Punk's OTC was saying in the tweet as well. Far more people think they can generate 14% APY than can actually generate 14% APY. So it's not necessarily the case that that would be a straightforward thing to do. The Crazy Ape, Chris Day in the comments, shout out to him, says reality is it's a marketing stunt, and he's likely incentive aligned with the lending platform. I mean, there could certainly be an element of that, Chris, because as G Money disclosed, as people already know, he is an investor in Gondi, so that could certainly be part of the game. But I still think the thesis still plays out. Like the underlying crypto market, the underlying crypto punk market has still been seeing these like loans on a routine basis. If you follow the Gondi bot, and this has been happening across multiple platforms as well, but there's like routinely like 30, 40 ETH loans on CryptoPunks over and over again, like 50, maybe 50 to 60% loan to value over and over again, about 10 to 15% APY. So it's I definitely think it's, it takes the headline because it's the highest value. But in terms of the APY and the loan to value, it's actually a little bit more conservative. But I do take the point. Legendary, want to check in with you there? Any quick reflections on what we've just said, or should we go to Oxy and Kalano?
Yeah, I mean, high numbers like that always are beautiful marketing for a platform, right? Because we have proof to that. We are speaking about it on the show, but very curious to hear what Oxy and Kalano have to say on this. I think Kalano was first with his hand up.
Yeah, let's do it. Kalano, welcome to the stage, my friend. What are your thoughts there?
Yeah, thank you. Oxy was first, but since I've got the mic, I'll just go. It was more a newbie question, actually, and I don't mind passing for the newbie since I'm probably not the only one in the audience, as it's a pretty complex topic. But do you, and I think that's more a question for you, B-Check, since you're partnering with Gondi. Do you think it's valuable to place money into a relatively stable asset? And I know the person that was talking before me made a good point about all-time high loans on Bored Ape, which are obviously now down like 65% or something. But as you know, debt is not taxed in most countries, whereas I'm kind of wondering what is the overall legislation, and I know that's very much country by country, but taking a loan for a flip and then making some money on that flip and then repaying back your loan, if you were to do that in a traditional market, money accrued from debt is not taxed. That's in the US or the UK. So do you have any idea of how that could work in this kind of model?
Yeah, so I think the key thing to say is that, look, we're definitely not financial advisors in any way. We're definitely not accountants. So wherever you are, I think it would be best for you to like double check with your kind of system. I can give my like thought on what I think makes sense. And typically, as a lawyer previously, generally what kind of makes sense is kind of how things work. But take it with a pinch of salt and apply your own advice to it as well. So my understanding is like if you were to buy an asset and you and then you take a loan out against it, and say the loan out against it is higher than what you bought it for, so technically you're kind of in profit, right? But you haven't actually you haven't disposed of the asset, you just took a loan out against it. So my understanding is that's not profit, that doesn't get booked as profit, although you 100% needs to double check that wherever you are. But I think you're asking about the extension point, which is like, look, you've taken out the capital and now you've bought another asset and might do some trading with that. Well, look, my instinct on that is that, well, that's just normal trading activity. So even no matter where the money's come from, you have some money, you buy another asset, you trade it, you make some profit, then you got to pay tax on that because you've actually bought another asset and you traded it. So I think that it would be what makes sense to me, but I'm being very clear here. This is just what makes sense to me. We often are not correct and don't necessarily know everything for sure. So please do double check. We're going to get into the Web3 roundup in just a moment. Before we get there, Oxy, welcome to the stage, my friend. What are your thoughts? Do you have a question? What are you thinking?
Yeah, good morning, guys. So I guess I'm curious. I'm kind of thinking ahead, like next steps. So like what's next for the lending market? And what kind of gets me excited is the ability for this to go beyond a single asset and to like reach maybe a project level. So say the project wants to take out a loan against whether it's their treasury balance or if they have certain NFTs in their treasury. Is there going to be a way at some point where a bunch of people can like you're saying, like syndicate loans for these projects that are building something that then can also be backed on revenue, which comes in the form of like secondary sales or creator fees or whatever it might be, that's fully transparent. Like currently, if I loan to a bank or to a company, every like quarter or every year, I'm getting financial statements where I can see their audited revenue, I can see their audited net income. But in this decentralized and very transparent market, I would be able to check in on my investment or debt issuance by just looking at the chain. Okay, do they still have those NFTs in their treasury, or do they still have that ETH in their treasury, or whatever it is that is leveraged against my loan in a very open way? And I'm curious to your guys' thoughts on this, because I think if like a project building something and they need additional finances, I think this is a perfect way to do it.
Interesting. Could you just maybe ask the question again? Just I took in all the information.
Yeah,
just in a more concise way.
I guess do you see a world where projects can then take out loans similar to this, but on like a greater scale that's also backed by like secondary sales and in like, I guess, income more or less, rather than just singular assets?
Well, as in like they have a bunch of their own NFTs in their treasury and then they take loans out
Yeah.
against it?
Yeah, and then also like based on secondary sales. So like Pudgy Penguins have all this revenue coming in from secondary sales or whatever it might be. Like, will that be a factor that loans are also taken against or like looked at?
Okay.
Yeah, like a revenue perspective, I guess.
Sure. Well, we've actually seen that already. So not from an NFT project, but on NFTFi a few months ago, I remember reporting on it. There was someone's like future income stream, because there are certain NFTs that can represent future income streams, like on chain that have been set up, and someone took a loan out against their future income stream. So in essence, that is what you're describing right now. Should NFT projects be doing the same thing? Probably not. I don't know. It depends how reliable those things are. Depends how consistent they are. But maybe if it gets to the point where you have all this kind of data and history to back it, I definitely think in principle the idea is already a yes, because it's already happening. So to answer your question simply, the answer is yes, it's happening. It can happen more. Should NFT projects do it? That part I'm not 100% sure, but would love to bring Legendary in on that. And then I think you wanted to add something to the tax question as well, Legendary.
Yeah, absolutely. Thank you. Should NFT projects do that? I think a lot of NFT projects already do like their initial financing with the mint, and then they're trying to build a revenue stream or additional revenue streams. And I would say if you're at a point where your NFT project has that level of value that people are happy to lend against it, and nobody or to borrow against it, and nobody would be scared by seeing pudgies suddenly being like, "Yo, we're gonna." I don't know if Pudgy has a treasury and how big it is, but let's just assume they have 100 Pudgies and like, we need additional funds. So we're just going to throw all of them on Blend, on Gondi, or wherever, and going to borrow against that. I would say with a project of this size, nobody would like, blink an eye at them. We're like, cool, yeah, do it, guys. But if it's a project that doesn't have that reputation, realistically speaking, nobody would want to borrow against that. So if you're at the point where you can tap into the lending market, you probably don't have those funding needs. So I don't think that for many projects it would be a realistic option to fund whatever they want to build via the lending market, because either you are at that point where you're like qualified for that and have made the money, or you're not there, and then people would be less likely to borrow against that. The second point that I wanted to make real quick on the tech side of things, I'll keep it short because I know we only have like 8 minutes left and want to go through Web3 roundup as well, is that is definitely going to be something that will play a very important role, tax optimizing and tax like optimized offers. Obviously, the art market and borrowing against that has lots of tax advantages in the real world. That's being replicated in Web3, and we're seeing many more offerings like that. There is a credit card, for example, and I will connect this in a few, that allows you to basically, when you pay with a credit card, you're not selling off your cryptocurrencies, but you're taking a loan against, say, your stable coins in euro or in GBP. And then you use that loan in fiat to purchase the good that you wanted to buy with the credit card. And then you repay that loan using crypto. So basically, you did a fiat transaction without ever having to sell your cryptocurrencies, which in many jurisdictions in Europe as of now wouldn't be a taxable event. So basically it's set up in a way that you can spend crypto and not have to pay taxes on that. Obviously a loophole that at one point will be fixed. Point of that is that we're now at a point in the market which makes it very interesting, where it's worth for projects to think about how they can structure the services in a tax optimized way. And lending has historically always been something that has many tax holes across many tax jurisdictions worldwide.
Very good point. Lending's always been a way to maybe optimize various things. And as Funky made the point earlier, like that's how wealthy people, institutions, that's one of the ways they access credit routinely, because it can be very, very efficient. Great discussion. I think we might even continue with this just after Legendary, or we might touch on something else. But before we do that, we want to get you to the Web3 roundup. But before we do that and get you up to speed with everything else that's been going on in space in the last 24 hours, I want to shout out our sponsor, which is very conveniently Gondi, which is the premier NFT lending protocol trusted by legendary collectors Seed Phrase, G-Funk, Tony Herrera, Phantom Scribbler, and Mooncat. And of course, the location for this epic $1 million NFT loan. Today, we showcase Gondi's unique flexible principal feature. Flexible principal allows borrowers to choose a lower amount of principal from an existing loan offer, which gives borrowers more flexibility in case they only need a small amount borrowed. This wasn't really possible before because you could only accept whatever offer was on chain instead of adjusting it to what you really want. This innovation obviously helps every borrower to not overextend themselves unnecessarily. Legendary, what do you think of that feature?
Basically is mimicking what the refinancing in tranches does on the lender side, but on the borrower side, and just introduces an additional layer of flexibility, which I think is quite helpful because you might run into a liquidity situation where you have an ape but need less liquidity than borrow against like your entire ape and are happy with a lower principal. So it is a smart thing to have a feature like that, in my opinion. Yeah.
Good stuff. Very, very good. And if you'd like to learn more, follow Gondi at Gondi XYZ and head to their website or jump in their Discord to learn more. Let's get into the Web3 roundup, as always, pinned up top in the snapshot. Last few minutes of the show. Let's get you up to speed. Number 1, OG BTC artist Rare Skrilla appears to have spent more than one Bitcoin inscribing 101s on Bitcoin. Pretty expensive, but also interesting to see. Number 2, NFT marketplace aggregator Mintify starts season 3 of trading to earn XP and farming the ME airdrop. Number 3, MetaStreet NFT lending platform alludes to a collaboration with huge liquidity provider CBB 0FE, the very prominent account which is putting capital all over the place, particularly in Blur. Number 4, Binance announces a Ronin listing, which is pretty well expected, though I believe the price tanked, or not tanked, but went down significantly after that news. Getting into some more news, Book of B sells out 295 Pepe heads for 0.04 ETH, raising 11.8 ETH. Nice little raise for that artist. Next, 40 RSIC on Bitcoin was swept for 3.4 Bitcoin, moving what was a free airdrop to a 0.07 Bitcoin floor price. That is pretty epic. Again, airdrops doing numbers. And finally, pro-Bitcoin president of El Salvador, Nayib Bukele, secures re-election. Good to see pro-crypto candidates being successful around the world. Legendary, that is the Web3 roundup. Do you want to final take on the Gondi news, or do you want to touch on one of these final headlines to bring the show to a close?
Let's maybe touch a bit on Farcaster. I mean, we don't have a lot of time to get into the details of that. But what I have been observing is a very drastic change of the timeline sentiment when it comes to Farcaster, which I find, I mean, I find it a bit surprising. I don't mean this like in a neither positive nor negative way. I'm just surprised by it because we had like a wave of trying to get attention around Farcaster, and that didn't work out in the past, but somehow the sentiment has changed around that, with many prominent creators now like positively reporting about Farcast. And I wonder what has led to the change, but I don't really have a clue.
Okay, interesting question. I think we'll have just enough time. Hopefully Kusho can come in on this. Kusho is top comms maverick and resident Farcaster expert. Kusho, what is your report? Welcome to the stage. What is your report from Farcaster Central?
Yeah, ladies and gentlemen, GM, this is the weather report from Farcaster. This is Kusho speaking. We've been here for a couple of weeks. Things have been down, they've been up. A lot of changes have been happening in the Farcaster ecosystem over the past few months. I have intentionally reached out to you guys on multiple occasions, like, yo, join Farcaster. I think the sentiment is good. But it's good to see it really pop off and fly off this time.
So why is it popping off right now, Kusho? What do you think the true explanation is?
The true reason it is popping off right now is that Farcaster is starting to really give off the vibe of what crypto consumer products will look like.
So
the way they've done this is that
practically
the new feature that they've launched right now, which is frames, allow you to kind of take a lot of different actions within the app without stepping outside of the app. So you can mint NFTs, you can do free mints, you can do paid mints, you can test out a bunch of features just by using frames right in there of the app. You can also read newsletters inside the app, a bunch of really amazing things. And the most evidence one recently was a lady or a girl that was selling cookies for Girl Scouts, and the entire process of it was inside the Farcaster app. So you choose a cookie type that you'd like, you choose how many you want, the cards will pop up right there, and then once you click pay, it just takes you straight to a Coinbase commerce page that you just clear off with ETH or any other thing and fill in the details of where you want it delivered. That was epic, and the reason, and that was intentionally epic. No, that was incredibly extra epic because the amount of people who fluttered towards that and actually bought cookies simply because there was this whole in-app experience of being able to do it without even leaving Webcast was brilliant. And especially because frames are built onto the Farcaster protocol, not onto Webcast. So any developer that is building an app on Farcaster also has access to that same functionality of making something consumer friendly inside of their app, even
Very-
without any stress.
Very, very interesting. I think that also genuinely sounds really cool. This frame stuff sounds very cool. Not making people link out to other places sounds really cool. Final question, Kusho. Actually, K Sensei has just joined. We've heard from you. Thank you for that quick weather update there. K Sensei, welcome to the stage, my friend. What would you add to what Kusho said? We've only got a minute now. And also, is there this degen aspect where people think they're going to get a load of airdrops? What's your take on that as someone who's been experimenting there too?
Yes, GM everyone, that's exactly what I'm here to add. First of all, I didn't even think of the Thin Mint thing, but it did blow up on Twitter, and that must have been a big push for people to try it out. But secondly, the degen airdrop happened, which is a meme coin that originated on Farcaster. It's not like by Farcaster, but there have been a few coins that the Farcaster community came up with, and this is one of them. And it just had its first airdrop. And people who were there from the beginning, unfortunately, I'm not there from the beginning enough, but people like Kusho are very impressed. And I think that always draws people. Season 2 is already announced. So people are flocking there in the hopes of something happening.
There's the real truth. Kusho came with all the consumer application, nice functionality. Read your newsletter in the app. Really?
Okay, you caught me. You caught me. You caught me. I got $10,000 worth of degen. You caught me. Yes.
Well,
yes,
look,
I claimed an airdrop of 10K. Yes.
There we go. There's the real reason.
I
Potential.
knew there was a token somewhere involved if stuff starts trending on X.
Okay, so this is what the modern market plan is. We go over to Farcaster, we do the things that we need to do, and we get a bit of this, get a slice of this pie, Legendary. What do you think about that?
Absolutely. I'm all here for airdrops. You know, staying in Chelsea is not cheap.
Yeah, I mean, I'm actually on Farcaster already. I think I might be, but Kusho, how much do you think I get for posting GM once on Farcaster, like months ago? It exists, honestly. It
Okay,
exists.
I think you get some. I'm not sure how much. Probably not much. How much interaction did the GM post get?
Maybe none. I can't remember.
Oh damn! You just have to check to find out, man.
Okay. Let's see what the value of one GM is. K-Sensei, final point. We're going to close because we've run over time. Final one from you.
Absolutely. First of all, I also posted GM 2 months ago and got nothing, so I wouldn't get your hopes up. And secondly, they actually have a DApp for social audio built. It's called the Abura. You can test it in test flight on Apple right now.
Oh.
And there's even people hosting something there. I have no idea who there are, but something is happening.
That sounds fun, to be fair. I would like to do that. And hopefully my GM was 4 months ago instead of 2. I don't actually know exactly when it was, though. I don't know if that would make a difference. Legendary, final thoughts. Let's close the show out. Final thoughts.
I posted more than one gym. I posted like 10 of them. So definitely you should log in and see what has happened.
No, GMs get no currency.
Yeah, but
no
Sloth branded GMs, or back then Ute branded GMs, they are a different kind of beast.
Okay. Well, that is interesting learning. Thank you so much to Kusho and K-Sensei for bringing that information to us. Thank you, Legendary, for co-hosting as always. Shout out to our sponsor, Gondi, again, premier NFT lending platform. Do hop over to their Twitter at GondiXYZ or their Discord if you want to check out them and find out some more information. Thank you to everyone else on our stage, Sammy, Oxy, Funky, K-Sensei, Kusho, and thank you to everyone in the audience. It's been a pleasure. Great to bring the week in with you, and we will see you again tomorrow. Take care and have a good day. Bye-bye.